Ever wondered what would have happened if you had invested $1,000 in Adobe in 2018? Fast forward to March 2024, and that investment would be worth $2,244, marking a 124% increase. That's an average annual growth of 18%. Today, we're going to dive into Adobe's financial journey from 2018 to 2024 to understand this growth. Looking at Adobe's revenue, it's clear that the company has seen consistent growth. From 2018 to 2024, Adobe's revenue has been on a steady upward trajectory. In 2018, the company was bringing in approximately $2 billion. By 2023, that number had climbed to $19.4 billion, marking an average compound annual growth rate, or CAGR, of 17%. The journey wasn't a straight-line increase, though. Adobe saw a robust revenue growth of 24% from 2018 to 2019, followed by a slight slowdown to 15% in the subsequent year. The momentum picked up again in 2020 to 2021, with a growth rate of 22% before tapering off to 11% and 10% in the following 2 years. So, where does Adobe's revenue come from? The lion's share, 73% to be exact, is from digital media. This includes popular software like Adobe Photoshop and Adobe Premiere Pro. The digital experience segment, which encompasses Adobe's marketing and analytics tools, contributes a quarter of the total revenue. The remaining 2% is derived from publishing and advertising. Geographically, the Americas account for 60% of Adobe's revenue, followed by EMEA, Europe, Middle East and Africa, at 25%, and APAC, Asia Pacific, contributing 14%. The trend of Adobe's revenue growth over the years demonstrates the company's ability to effectively monetize its products and services and to expand its global footprint. Adobe's consistent revenue growth, fueled by its diverse sources of income and global reach, has been a key driver of its stock performance. But the story doesn't end here. Let's delve deeper into Adobe's financials to get a more comprehensive understanding of the company's profitability and financial health. A crucial part of understanding Adobe's financial health is its profit margin. Diving into the details, let's first explore Adobe's gross profit margin. The gross profit margin is a key profitability metric for any company, as it shows how efficiently the company can turn raw materials into a finished product. In 2023, Adobe's gross profit margin was an impressive 88%, a ratio that has been almost consistent for the last 6 years. This suggests that Adobe has been remarkably efficient at turning revenue into profit, which is a strong indicator of financial health. Now let's dig deeper into Adobe's expenses, which play a significant role in determining the company's profit margin. The major components of Adobe's expenses in 2023 were research and development, which accounted for 18%, and selling, general and administrative expenses, which made up 35% of the total revenue. This distribution of expenses has remained relatively stable over the last 6 years, suggesting that Adobe has been able to manage its costs effectively, contributing to its strong gross profit margin. However, it's not just about gross profit margin. The net profit margin also holds significant weight. The net profit margin takes into account all the expenses of a company, including taxes and interest, and then divides the net profit by the total revenue. In 2023, Adobe's net profit margin stood at 28%, which is slightly lower than the 6-year average of 30%. This slight decrease in net profit margin, however, does not necessarily indicate a decline in Adobe's financial health. Instead, it could reflect strategic decisions made by the company to invest more in growth or to weather short-term market fluctuations. Despite slight fluctuations, Adobe has maintained a strong profit margin over the years. This statement underlines the company's ability to manage its costs effectively and generate a healthy profit, which is a key factor for investors to consider when assessing Adobe's financial health. Another important factor in Adobe's financial growth is its net profit. This is the amount of revenue that remains after all operating expenses, taxes, and costs have been deducted. It's the bottom line, the real measure of profitability. Let's take a trip down memory lane. In 2018, Adobe's net profit was a respectable $2.6 billion. Fast forward to 2023, and that figure has more than doubled, reaching a whopping $5.4 billion. That's an annual compound growth rate of 16%, a testament to Adobe's consistent performance and its ability to generate profits year after year. Now you might notice that Adobe's net profit margin in 2023 was 28%, slightly lower than the 6-year average of 30%. But don't let this slight dip fool you. While it's true that a higher profit margin typically indicates a more profitable company, it's not the only factor to consider. In fact, Adobe's highest net profit in the past 6 years happened in 2023, despite the lower net profit margin. This suggests that Adobe has been strategically lowering its prices to sell more products. So, while the profit margin might have taken a slight hit, the overall net profit has increased. This is a classic volume versus margin trade-off. By sacrificing some profit margin, Adobe has been able to increase its sales volume, resulting in a higher net profit. This is a strategy that many successful companies employ, and it's a clear sign of Adobe's business savvy. In conclusion, Adobe's net profit growth from 2018 to 2023 shows a company that has been consistently profitable, with a keen understanding of how to balance volume and margin to optimize profits. It's a shining example of a company that knows how to play the long game, making strategic decisions that boost its bottom line. Adobe's net profit growth is indicative of its successful business strategies. Adobe's operating cash flow and return on equity, ROE, provide further insight into the company's financial performance. Let's take a closer look at Adobe's operating cash flow, or OCF, which is the cash generated from its core business operations. In 2023, Adobe's OCF was an impressive $7.3 billion. Comparing this to the 2018 figure, we see a compound annual growth rate, or CAGR, of 13%. This strong growth in operating cash flow indicates that Adobe has been effectively converting its revenues into actual cash. Simultaneously, let's consider Adobe's free cash flow, or FCF, which is the cash left over after the company has paid its operating expenses and capital expenditures. In 2023, Adobe's FCF was $6.9 billion. This large amount of free cash flow suggests that Adobe has a good amount of cash that can be used for growth opportunities, shareholder dividends, or debt repayment. Now let's shift our focus to Adobe's return on equity, or ROE. In 2023, Adobe's ROE was 33%. This figure is derived from the DuPont analysis, which breaks down ROE into 3 components: net profit margin, asset turnover, and financial leverage. Adobe's high ROE indicates that it has been effective at generating profits from its shareholders' equity. In conclusion, Adobe's strong cash flow and ROE highlight its financial efficiency and profitability. In conclusion, Adobe's financial performance from 2018 to 2024 shows consistent growth and stability. The company's revenue, underpinned by a strong profit margin and net profit, has seen steady increase. Adobe's asset growth and liquidity, backed by a robust cash flow, further demonstrates its financial strength. All these factors contribute to Adobe's impressive performance over the years. Remember to subscribe for more insightful analyses, and comment down below which company you want us to analyze next.